Hi guys, it's Any aka the Not Trader, your friendly neighborhood swing trader, back again with another video. And in this video I'm going to show you how to trade a bull flag and a bear flag. Let's get straight into the video. You know what I'm going to ask you to do next. Hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. I've got Facebook, Twitter, and Instagram at The Not Trader on all social media platforms. And if you check the description section below, there'll be a link to my mailing list. Join my mailing list for priority access to my training course that I'm creating for beginner traders on how to trade. You also get email weekly on all my latest videos, and also a watch list spreadsheet that shows you all my entries, my exits, and my profit and loss of the trades that I've made. Let's get straight into the video. Now, this video you're going to see me add to the chart pattern video series that I've created. I've got an abundance of videos in that playlist. If you check that playlist, then there's lots of different videos that you can check, whether it's double bottoms, double tops, expanding wedges. There's lots of videos on different chart patterns and how to trade them. And in this video I'm going to be talking about the bear and bull flags. Now, this is probably one of the easier chart patterns to both identify and also to trade, because it's not very complex and they're very easy to identify. Let me get straight into it. So the bull flag looks a bit like an ascending channel pattern. It goes from the bottom, it comes up, and then it hits a support, resistance. It doesn't necessarily have to happen 3 times. It can have several times, but sometimes, for the most part, I've seen it happen 3 times, where it hits the support 3 times before it breaks out again, and it's normally making higher highs. So each support that it hits is a higher one than the previous one. So as you can see here, it's hit the resistance, support, resistance, support, resistance, support, and then broken out again. Unlike a normal channel pattern, it won't consolidate at the old support resistance as a new support. It will just straight up break out. Now, bull flag and bear flags are normally identified in smaller time frames. They normally present themselves in the shorter time frames, so you might see them in a maybe 1 hour time frame or below, so maybe 30 minutes, 15 minutes, 10 minutes. They hardly ever really present themselves in like the 4 hours, the dailies. Not to say that they can't happen, but they don't normally present themselves in larger time frames. So the way I trade it is that once it starts making find a new resistance, support, resistance, support, what I'll do is that I'll wait for it to break out, and once it's breaking out of the old resistance, I'll set a stop loss just below the old resistance, and then just let it shoot up and carry on going, and I'll just carry on raising the stop loss. I won't wait for it to retrace, because with a bull flag you don't know what it's going to do after it breaks out. It could come back all the way back down again, you never know. So I just carry on raising stop loss as it keeps rising. I won't wait for a retracement. And the bear flag similar, is literally just the opposite of the bull flag really. Price will be falling, and then it'll find the support, and then it will look like it's making a descending channel pattern. So it'll hit this support, hit the resistance, hit the support, hit the resistance. Once again, it displays itself in shorter time frames, but it's not exclusive. It can still be displayed in longer time frames, but for the most part, it's shorter time frames where you'll find these chart patterns, these bull and bear flags. Now, when it breaks out, I will do the same thing and set the stop loss just above the breakout point, and I'll just keep lowering my stop loss as price falls. I will not wait for a retracement like I do on, let's say, a channel pattern. I will just keep lowering my stop loss as price keeps falling, because you don't know what price will do after the fact, because there's no real identification of what the chart will do after the facts. So yeah, this is one of the more easier patterns to identify, and there's not much nuance to it apart from the fact that you just need to set a stop loss once it's broken out, and just keep moving it, trailing it. This is probably a good situation where you want to have a trailing stop loss, for example, because then you could set it a certain amount of pips from where the price is, and then the stop loss will just carry on moving with the price. So this will be a good situation for a trailing stop loss. Okay, so now I'm just going to go into a real life scenario where I've seen a bear flag, because I like to not just give you the theory but give you the practical, because as I've said in all the other chart pattern videos, it's great to show the theoretical side of things, but the patterns are never this smooth as you see in textbooks or in or drawn up by people on YouTube. So I like to show you how these chart patterns look in reality. So let's get straight into it. So guys, you're gonna have to forgive me. There's a lot of lines all over the place, but I'm on the 30-minute chart for Kronos Group, the weed company. Now, if you know about my review, I'm gonna probably date this by even mentioning this, but I did a three stocks I'm picking for May 2019, and Kron was my main one. This is the one that I was really singing its praises about because I thought it was gonna be a buy. But when I looked at the 30-minute chart, it looked like a bear flag was being created. So I had to exit that trade prematurely rather than play it out. But this is what I meant when I say a bear flag. It's not the prettiest sight in the sense where price, if you look at the 1 hour chart, so you can see that price came down. There was previously a bearish move, so price had been falling for quite a few days, maybe even a couple of months, and then it consolidated at the $15 price point, around the $16 price point. So on the 30-minute chart, so you have to assume price from this top left hand corner has just been falling, and then it started consolidating and making like a little channel pattern within the 30-minute price range. As you can see, I plotted these lines here to show that there was a channel pattern being formed, and it's not the prettiest sight, but there was a channel pattern, as you can see, because it stayed true to this section. Now when it got to here, it started kind of losing momentum, and when I identified it was a bear flag was primarily because of if you can see here, you could plot a line from here to here. So the price was making lower lows, but within the channel. So I thought, okay, this might be a bear flag because it's come from a high point, consolidated here, and now it's going to drop. So when it got to here, I was like, okay, this is where actually I was in a long position, but I exited it here because I saw that price wasn't making hitting the old resistance like it should have. It was just kind of consolidating. So I exited my position, and then lo and behold, over the next day, price fell and it fell down to here. But if you were to trade a bear flag, what you do is that you short your position in this situation, and then have a trailing stop loss, because once it hit this line, which is a previous support that it's hit several times, kind of rebound and start coming back up again. So you would have lost all the profits that you would have made if you had shorted it but just left it running. You'd want to short it and have a really tight trailing stop loss, so that when it hit and it started changing direction, it could time you out. At least you take away a little bit of a profit. So I hope that kind of makes sense. This is kind of not the prettiest bear flag, but it's even better to show you something like this, because not all of the chart patterns that you see in the textbooks are going to be presenting themselves the way you see it in the textbook. So you need to see real life situations so you know how to identify them when they display themselves in the actual stock markets. So yeah, that was just me covering bull and bear flags. Aka the Knock Trader signing out.